What's up guys, welcome to another video. So in today's video, I wanted to explain to you guys why your supply and demand levels keep failing and really what to look out for in order to validate a strong supply and demand level. All right, so let me get first back to the slides and explain to you guys. So there are many different reasons why a supply and demand level can fail. It could be a lack of consolidation at the origin, it could be a weak break structure, or just the time frame of the level is way too low. So in order to validate a level, we really need to see and have quite some components aligned. In my opinion, it's really better to be picky, have less zones, so you have less trades, and focus on high quality setups rather than trading every single level and just have many unnecessary losses that you could avoid. So let's cover the checklist that I actually use all the time to validate any supply and demand level. So point number one is we really need to see a strong break of structure. Okay, this just means the more highs and the more lows that are broken, the stronger the level is. Point number two, very important, is a lot of consolidation before the actual move happens. And this is on a lower time frame. So let's say you have a demand on a 4-hour time frame. You can look on the 1 minute or the 5 minute. You really need to see a lot of consolidation before the move up or the move down happens. This just means that buyers and sellers were fighting, and in the end you can see whether the move up or down, who won that auction. We also need to see on point number three is a lot of follow through. Okay, so once the demand has been confirmed, it did a break of structure, there was consolidation. It's not enough just to have one candle to the upside or the downside that confirms these 2 points. We really need to see a lot of follow through to the downside or a lot of follow through to the upside to really show that buyers or sellers were very active and strong enough at the origin to push the price in that direction. Now, point number four is ideally a fresh level. Now, obviously, like I said here, used levels can work too, which is what I use as well. But just fresh levels could be a lot stronger and have bigger moves. That doesn't mean that used levels are not good, because I trade them as well. They just basically turn into support or resistance levels instead of just a demand or supply. Now, point number five is it has to be made from an engulf candle. Okay, this is really important. It just has to be made from an engulf candle, a strong candle without too many wicks on the top side if it's a demand, or if it's a supply on the downside. You really have to see a lot of strength in that engulf candle, a lot of aggression after the origin, after the consolidation at the origin. And then the time frames, well, you can draw them basically from the H4 down to the M15. And obviously this goes without saying, the higher the time frame the level is, well, obviously the stronger it is. Okay, so let us get to the charts and explain to you guys what a weak or a strong supply and demand level is. So over here, this would be a weak supply, right? You can see there is break of structure. You can see we're on the 2-hour time frame now. We have these lows here. It did a break of structure, right? We do have an engulf right here, okay, a small one. We don't see a lot of follow through. We also see a lot of wicks here on this move down. So this isn't really the strongest zone for me yet. Yes, you can see some consolidation on the H2, on the 2-hour time frame, but I don't really see a lot of follow through. You can see all these wicks at the bottom, which I really don't like. So let us go down to like a lower time frame, maybe the 5 minute, and see the consolidation before the drop happens. So as you can see right here on the 5 minute, you can really see once the drop started happening, there wasn't really a lot of consolidation. It was just a move up and a move down, right? There wasn't really a lot of buyers and sellers trying to fight here and building volume in that area. So as you can see, there's a lot of volume and consolidation lacking. There wasn't a clear engulf on the 2-hour time frame, and there's also not a lot of follow through. And then as you can see, price just once it went back into the supply, it just was very slowly grinding up, and then in the end just rejected this supply. So this would be the example of a weak supply level that I wouldn't even be looking at. So let us look now at a stronger level. Let's start at the H4 time frame. So for example here, what you can see is we can see a rally, a base, another rally. Obviously this is the 4-hour time frame, so if you go on a lower time frame, you'll probably see a big rally here. But we can see this move right here, we did a break of structure. As you can see, we have all these highs, break of structure. It is made from an engulf. You can even see on the H4 time frame that we have a lot of consolidation for the actual move up. So this, for example, for me would be so far a valid demand. I'm going to mark this as demand. So this would be a valid level so far. Let's go down to like a smaller time frame, see if we actually see consolidation. So here we already know that on the H4 time frame, all of this is a lot of consolidation. As you can see on the 5-minute, obviously this whole range is a lot of consolidation as well. I'm not really a big fan of this aggressive move down and aggressive move up here, but you can still see a lot of consolidation here before the actual move happened, and it was quite a rally, okay, from this point. So you can see this is a almost 43-point rally, so this is quite a big move, and price actually has just quicked into it and reacted from it. Okay, so this is clearly a strong level, and you can choose how you draw this. You can just draw this on the H4 time frame. You can maybe go down on the H3, maybe see it clearer. You can see more follow through here as well, so maybe you can adjust it to the 3-hour, maybe to the 2-hour, which would be even a little bit bigger like this. And you can just keep going down and refining it. And then, for example, on the H1, I don't really like how it looks. I don't really see an engulf, so I'm just going to stick with the H2 time frame basically to draw this demand level. Now, another tool that I like to use to see where the most volume is before the actual move up happened is this tool right here. It's a fixed range volume profile. It's on TradingView. You can literally mark the whole consolidation level and just see where the most volume is. And as you can see, the most volume is from this area right here, from the top of this bearish candle here, where we drew the 2-hour demand, which is at 66656.50. So we draw that very well, and then the volume starts dropping literally from the edge of this zone as well. You can see the volume starts dropping heavily. So we actually drew this zone pretty decent. As you can see, the point of control is also more or less in the middle of the zone. So this would be a very good zone for me to draw. Now let's look at a supply level. So for example, here, what do we see? We have a break of structure clearly to the downside. You have this low here. We broke it. So we know the break of structure is there, only of one low though, but it is again the 4-hour time frame. So this is generally a lot stronger than obviously all these smaller time frames. It is made of an engulf, so that is pretty good as well. Now let's see if we can actually see some consolidation before the move down happened. Because as you can see here on the 4-hour time frame, there wasn't too much follow through, which is just one candle and then a lot of wicks here, so not a lot of follow through. Let's go down. On the 3-hour time frame, we don't see an engulf. Can adjust it. On the 2-hour time frame, we don't see an engulf. You can see a little bit more follow through though. On the H1 time frame, also no engulfing candle. Let's look at the 45-minute. Okay, we can see an engulf here, but I don't really like this wick to the downside. It doesn't really show a lot of strength, so I'll just keep it at the 4-hour now. Let's go down to the M30 time frame. I don't really see an engulf here, but I do see this right here. Okay, this will be another area that I mark, and I'm gonna keep going down the time frames and then see where the most consolidation is. You can see the reaction from this price level was a lot stronger to the downside than this origin right here. So let's go down a little bit further. You can see on the M15 as well, we see an engulf right here at the top, but again, big wick here on the downside, so I don't really like that. Price was also not moving very aggressive from this price level. It was just very choppy and a lot of wicks everywhere, so I'm not really a big fan of that. If you compare it to this level, for example, on the M15, you can make this zone a little bit bigger. You can see once price here shifted, it just made a very aggressive move to the downside. There was a lot of follow through. It's made of an engulf. It broke multiple lows on the M15, so that's all good. Now let's look at the M1 time frame, see where most consolidation is. So you can see that the consolidation here, to me, is not the clearest. Okay, you can see a move up and yeah, a little bit consolidation, but also not a lot of consolidation and aggressive move down. So I don't really like that. And as you can see here, for example, on this other M15/M30 zone that we have, you can see there was a lot of consolidation and then an aggressive move down. So this will be my valid supply zone for today that I'll be looking out for if price comes back to this level. Okay, so for example, for today, for this trading session, which is September the 17th, my main two levels that I'll be looking at is this demand right here, this 2-hour demand, and this M15 supply. I'm not really interested in selling at this price level here because yes, it is made of an engulf on the H4 time frame, but it is just not what I want to see. I don't really see a lot of consolidation and an aggressive move down. I should see very slow price action, really trying to get lower, but I'm really struggling. And all of a sudden you see a lot of consolidation, a lot of volume right here, and then you see the aggressive move down. So this would, for me, is a valid supply, which fits all my rules. Okay, it's the correct time frame is the M15. There is breakup structure of multiple lows. There is consolidation before the move down. Also on the M15, it broke multiple lows, so there's a strong breakup structure. So this for me is a valid level to look out for. So these are, two very strong levels, and you can see price wicked into this and reacted from it. Okay, this doesn't look like a big reaction, but it's already a 14-point move, and this just looks very small. But then again, we're trading on the M1 time frame, so potentially here you can find entries depending on how you have your entry criteria. But you can find very decent trades just in small moves like that in 10 to 15 points. You can have very, very good RR trades. Okay, so if price would come back to this supply, I will definitely be looking to sell. And if the supply wouldn't hold and it would break, usually my rule is for about 6-point break, then I would look to trade the breakout and just target the highs and probably even further than the highs. Okay, and just trail my stop. But if you guys want to know more about how I trade breakouts, I have a video on that on my channel, so I recommend you guys check that out. So anyways, guys, I hope you found this helpful. Really, take a look at this checklist and, use it. Draw your supply and demand levels according to these rules that I follow basically day to day to draw my levels properly, as I've noticed that these levels are really strong and it's really hard to fail if you follow all these criteria, right? So anyways, guys, hope you found this helpful. If you did, just drop a like, maybe subscribe to the channel. And if you have any questions, let me know in the comments down below and I'll definitely get back to you and help you out. All right. So thank you for watching and we'll see you in the next video.